Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Top U.S. officials reaffirm defense ties, assuring President Marcos that America has the Philippines' back. Monsoon floods swamp Metro Manila as heavy rains drench the capital and nearby provinces. Customs eases red tape. Importer accreditations are now good for 3 years instead of 1. All that and more coming up. Let's check on global markets. They ended mixed overnight as investors weigh tariff hopes against earnings jitters. Wall Street struggled for direction, with traders banking on a potential deal to contain the damage from President Trump's escalating tariff wars.
Also, that we've had decent earnings. Earnings are coming in okay. We're still very early in second quarter earnings season. Just about 12% of the S&P 500 is reported. But the bank earnings look to be pretty solid with good capital markets gains. And then we've had sporadically good news from some of the airlines as well as the telecommunication companies that activity is holding in there okay. And the market seems to be cheering that.
The Dow Jones Industrial Average closed flat with a slight downward bias. The S&P 500 inched up by 0.1%, while the Nasdaq rose 0.4%, boosted by gains in tech ahead of Alphabet's earnings. Over in Europe, a mixed picture. The FTSE 100 gained 0.2%. The DAX edged higher by 0.1%, but the CAC 40 slipped 0.3%. Now, the U.S. is locking arms with the Philippines, vowing full commitment to the Mutual Defense Treaty amid escalating threats with China. Defense Secretary Pete Hegseth and U.S. Secretary of State Marco Rubio met separately with President Bongbong Marcos in Washington, warning that China remains the top security threat in the West Philippine Sea. Hegseth called for a real shield of deterrence. Marcos, in turn, thanked the U.S. for standing firm. The defense signals matter because regional stability isn't just a diplomatic issue, it's a precondition for investor confidence, trade flows, and economic growth. Now, after talking defense, President Bongbong Marcos turns to trade, meeting U.S. semiconductor giants to safeguard the Philippines' biggest export lifeline. Semiconductor Industry Association President John Neufer pushing for stronger U.S. commitments as global tech supply chains come under threat. So far, semiconductors are excluded from President Trump's 20% tariff on Philippine goods. But with trade policy in flux, that exemption could vanish. Electronics account for over half of the Philippine exports, and much of that is tied to U.S. tech ecosystem. What's at stake is more than just trade, it's manufacturing, jobs, investor confidence, and our place in the global chip supply chain. The government is tapping local investors to fund its spending plans, kicking off a 200 billion peso retail treasury bond offering this quarter. It's the first RTB sale of the year and a key pillar of Manila's broader borrowing strategy amid global market uncertainty. Finance Secretary Ralph Recto says that the RTB offering will help finance priority infrastructure and social programs while keeping public debt manageable and domestically funded. RTBs, or retail treasury bonds, are government-issued debt securities designed for individual Filipinos. Minimum investment starts at $5,000, offering fixed returns and zero default risk. Recto says this won't be the last RTB issuance this year as the Marcos administration shifts toward more local financing amid global volatility. Market analysts expect strong demand thanks to attractive yields and better access. A 5-year tenor is seen as the most likely choice. For investors, it's not just a safe haven, it's a way to participate in national development while hedging against uncertainty. The government is releasing 21 billion pesos in tobacco excise tax shares to provinces, a crucial funding boost for local governments dependent on the industry. The DBM says that the funds from 2023 collections will go to tobacco-producing regions, with 17 billion pesos coming from Virginia-type cigarettes and 4 billion pesos from burley and native tobacco. Officials say the windfall will fund infrastructure, health programs, and livelihood projects. But advocates are urging more oversight to ensure that the money goes where it's needed the most. On another front, heavy rains are pushing major river systems to dangerous levels, triggering flood alerts across Luzon and raising new questions about climate resilience and infrastructure readiness. In central Luzon, the Pampanga River Basin recorded 60 millimeters of rain in 24 hours, enough to cause flash floods in low-lying farms and supply routes. Conditions are worse in the Cignal River Basin. Over 70 millimeters of rainfall was recorded, with San Vicente Station showing water levels nearly 3 meters above the alert threshold. Towns at risk include Bayambang, Urbistondo, Mga Trem, Aguilar, and Ligayen, areas key to agriculture and interprovincial trade. Bungalon Station is also above critical, prompting flood watch in parts of western Pangasinan. In Metro Manila, the Wawa Dam is now above overflow at 135.69 meters, raising red flags across the Pasig, Marikina, Laguna Lake system. Areas in the flood path include Rodriguez, Antipolo, San Mateo, Quezon City, and Marikina, communities that intersect with the NCR's economic zones, road networks, and critical infrastructure. These developments underscore the need for investments in flood control, urban planning, and climate-resilient infrastructure, not just for public safety, but to protect economic activity from weather disruptions that are growing more frequent and more severe. Still on this topic, heavy rains trigger evacuations in Marikina as the river remains under second alarm. We're showing a live stream of the Marikina River. Water levels there have dropped below 17 meters, but strong currents persist after earlier reaching the 18-meter mark that prompted a third alarm. Mayor Maan Teodoro and 1st District Representative Marcy Teodoro are making rounds in evacuation centers to check on the affected families. For businesses, the stakes are growing. Marikina is a critical hub for manufacturing and footwear exports. Recurring floods disrupt supply chains and SME operations and workforce access, raising the alarm for climate-adaptive infrastructure. Now, the Philippine Stock Exchange is aiming high, targeting over 186 billion pesos in new capital this year. That's nearly 3 times more than last year, even with global risks and a slowing economy. But with exports expected to shrink and growth targets cut, is that goal still realistic? Joining us now is market veteran Jonas Ravelas, Senior Advisor at Reyes Tacandong. Hi, Jonas, and thank you for being with us this morning.
Good morning, Maiki.
Okay, Jonas, let's start with a target first. 186 billion. Do you think that's realistic given everything that's going on?
Well, I think from a 2024 perspective, that seems a bit realistic, but I guess it's a bold target right now, especially with the global uncertainty that we're facing.
Yeah, there is the need for funding, but there's also so much uncertainty. Are you confident that they'll hit that 186 billion target?
Well, I don't think we can hit the number, but I think we can probably do at least close to 100 in the second half.
Okay, so you think 100 billion is the fighting target. All right, let's zoom out, take a look at the broader equities picture and how it's shaping up for the second half and for 2025. How do you see things, Jonas?
Well, basically, you have to understand we have manageable inflation, and it seems that even the BSP is comfortable of looking at least 25 to as much as 50 basis points more to cut this year. So this is actually a good barometer, no? That we're starting to see a lot of potential gains into the economy. Remember, last year we had 75 basis point cut. So this should at least provide at least a 10% earnings growth this year for listed companies.
10% earnings growth this year for listed companies. Any expectations for any meaningful changes in these earnings expectations, Jonas? The geopolitical risks have subsided. We've got manageable inflation and an accommodative monetary policy. What are the chances that, we'll see an upside to these figures?
Well, basically, I think we can, mainly because hopefully there's no more extension of the tariff deadline, and that's August 1. So once August 1 kicks in, at least we have a month or two to probably gauge how the potential risk that I've mentioned of secondary inflationary risk and currency volatility will play on inflation. Of course, not to downplay the recent effects of these typhoons. No?
Yeah, we're in the third quarter. Rainy season is in full swing. We've been experiencing it over the past couple of days, incessant rains. Are you worried about the upside risks to inflation, particularly food inflation, on account of this inclement weather?
Yes, I think there's still that risk, probably until, and you have to understand that we are just in the early stages of what seems to be a close to 20 typhoons. Now we're just letter C, I think. So again, this could really have an effect on us. So despite the fact that expectations today are between 1.3 to 1.5%, I'm actually looking at closer to around 1.8 to 2% for full year.
Okay.
Taking
Yeah, go ahead, Jonas.
taking this potential impact of typhoons, so 1.8 to 2%.
That said, what's your outlook for monetary policy?
So for monetary policy, my baseline was actually 25 basis points. So this, as long as we don't cross 2% between now and probably September, I think there's still that room for um, another 25. So that 50 could actually materialize and bring policy rates to 475.
So two more 25 basis point cuts in the second half.
Yes.
Okay. Taking a look at GDP, the DBCC reduced its target from 6 to 8% to 5.5 to 6.5 this year. Is this in line with your own forecast, Jonas?
My baseline was actually 6%. So I'm assuming that second quarter should at least print at least 5.6 to around 5.8. If that first half will or the second quarter will materialize in those levels, I think the 6% is a fighting target with manageable inflation. So that should at least bring us closer to between 5.8 to 6% for the full year.
Yeah, your target is smack dab in the middle of the DBCC's target. Moving ahead, taking a look at the broader market, what's going to move this market in the next 6 months, Jonas? Is it going to be local earnings, global liquidity, or something else?
Well, basically, one is that if the first half earnings are in line with that potential 10%, then that should continue to gain traction. Meaning, especially with the resilience of consumers, the recovery of the consuming power as inflation settles down. We're starting to see trickle of foreign funds, and of course, hopefully by then the global uncertainty will be gone, mainly because the tariffs have been in place. We will slowly adjust to it, and people will realize that we need to move forward. And eventually, we need to do climate related infrastructures so that we will probably continue to have an attraction to foreign direct investments.
Speaking of foreign direct investments, you said that foreign buying is trickling in. What's it going to take for risk appetite to come back, and not just to come back with conviction?
Well, basically, I guess really one is the global uncertainty, and eventually, by another thing is also the recent political noise. Hopefully, by the end of by the fourth quarter, that would be gone. So that would probably be a good window to look at, especially for upcoming IPOs.
Speaking of IPOs, we've had only one this year, and Maynila delayed its debut. Are companies still too cautious to list? Apart from the global uncertainties, what's driving the hesitation?
Oh, well, basically, I guess it takes time, especially for business, are a bit more cautious compared to consumers. So, uh, I think probably another quarter of seeing where monetary policy will be stable to accommodative, then definitely we could see more activities by then, especially this third quarter. If we do, then definitely the fourth quarter should be a good window to gauge infrastructure spending for the first half 2026.
In this current landscape, Jonas, how's the current valuation environment? The market has been trading at a discount since 2018. For firms going public, are they likely to get a good deal? Are they likely to get good pricing?
Well, they're actually at a crossroads. If you really want to look at your value, to take advantage of your full value, you'll have to uh, give a good narrative why you will warrant that valuation. Otherwise, for investors, especially given this environment, you have to give investors discount or at least something to look forward to so that they will be compensated for the uncertainty so that it's not really a little bit of premium despite you have a good valuation. So I guess if we tend to look at the Philippine equity market and relative to where we are in 2018 at 9,000, one can say that the Philippines is really at a discount, and if we were to try to put it in simple terms, the Philippine market is trading like a fried chicken, which is around 350 pesos, while the valuation is actually a Peking duck, which is around 2,500. So this is where I think you want to take out all of the uncertainty so that people will realize that there's real value in the Philippines.
That's funny. Trading like a chicken, but valued like a Peking duck. Okay, Jonas. How do we win in this environment? What are the sectors to position in? Is it really a consumer play? Is it the pure golds? Is it, how do we win? How do investors position themselves in this current environment? And how do they seek out the chickens with the Peking duck valuations?
Well, basically, I guess we have to understand we're a consumer-driven economy, and being consumer-driven, that is good for food, construction, and even the real estate sector. And because we are playing a catch-up role with our peers, infrastructure plays are a good addition to your portfolio. So you have food, you have retail and construction, which again plays where a lot of our drivers of consumers, the OFW, and eventually the BPO workers. So these are eventually the sectors that would most likely perform once these uncertainties are have simmered down.
All right, final thought, going back to where we started, which was the PSC's 186 billion peso target for the year. What's going to make or break that, Jonas?
Well, basically, one thing that could eventually be a major driver is that once we get an upgrade. We've been talking about the Philippines on the road to A, and probably that if we do our cards right, we can have that either in the next 6 to 12 months, and that could add to the push to seeing the glow back to the market.
Yeah, well, hoping for that shot in the arm. Thank you for your time, market veteran Jonas Rovelas.
Thank you. Stay dry.
All right, we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Tuesday morning. Right now, the Nikkei 225 is in the green, higher by 0.2%. Hong Kong's Hang Seng Index is trading flat with a slight downward bias, lower by 0.1%. Shanghai's Composite down as well, down by 0.2%. And Singapore's Straits Times Index in the red as well, lower by 0.2%. Here at home, Philippine shares kicked off the trading week on a positive note yesterday, snapping last week's losing streak as hopes build ahead of trade talks between President Marcos and U.S. President Donald Trump. PSE index climbed 0.8% Monday, closed at 63.52. This as investors hunted for bargains and bet on a possible breakthrough in U.S.-Philippine trade negotiations, as President Marcos is in Washington to secure a trade deal and shore up alliance ties. Traders say sentiment remains fragile, with global tariff risks and Middle East tensions still looming over emerging markets like ours. Taking a look at the main gauge today, as of 10:26 this morning, main gauge is in the red, down by 0.2% to 63.38. The broader all shares index flat with a slight downward bias. As for the sub-indices, we're seeing a mixed picture. The financials, industrial, property, and mining and oil counters are trying to move up, build the PSE higher, but the holding firms and services sectors are keeping those gains limited. Volume is thin at 356 million shares, valued at just 562 million pesos. Market breadth is positive, however. We've got 75 advancers, 55 decliners, and 43 stocks unchanged. Taking a look at the currency markets, the peso opened stronger at 57.03 to the dollar, up from its previous close of 57.18. In other news, Senate President Chiz Escudero faces allegations of budget insertions totaling billions of pesos, mostly for infrastructure and flood control projects, which are now under scrutiny. The issue comes as the government struggles to fund priority programs amid a tight fiscal space. We have this report from Dexter Ganibe.
Flooding is everywhere. Areas were affected by the southwest monsoon, but there are some by insertions. The 2025 General Appropriations Act is allegedly flooded with insertions. Documents obtained by Politico.com show a big chunk of the insertions went to alleged bogus flood control and infra projects. When it rains, it pours, and just like torrential rains, a staggering 142.7 billion peso insertions were allegedly made during the Bicameral Conference Committee of the 19th Congress, under the leadership of Senate President Francis Escudero, which he defended in one of his press conferences at the Senate.
May mga proposed amendments ang mga senador at ang mga mambabatas sa Kamara man o sa Senado na dumaan sa proseso ng amendments. Kung saan mang lugar yon, nakalagay naman sa budget lahat.
Escudero is right. More than 12 billion pesos were allotted for infra and flood control projects in Bulacan. Another more than 9.1 billion peso went to his hometown, the province of Sorsogon. But Senator Joel Villanueva, who is from Bulacan, belied that there are such infra and flood mitigation projects in his province, as relayed to him by the Bulacan DPWH. And he will raise the issue during the budget deliberations in the coming months. If Bulacan didn't have the projects specified at the 2025 GAA, the question now is, make things right for the 2026 national budget. Dexter Ganibe, Abante Radio.
The Bureau of Customs is giving importers a break, extending accreditation validity from 1 year to 3 in a bid to speed up trade and reduce red tape. The reform backs President Bongbong Marcos's push to make the Philippines more business-friendly and comes as trade headwinds threaten supply chains across the region. The processing fee will more than double from 2,000 to 5,000, but Customs says a stronger system and faster turnaround times will deliver better value for businesses. Under the new rules, importers still need to file annual compliance reports, but those in good standing will enjoy automatic renewal. It's part of a wider push to modernize trade facilitation, minimize corruption, and make supply chains more efficient at a time when global uncertainty is raising the cost of delays. We're taking a short break. Business 360 will be right back. Welcome back. A year after President Marcos's SONA promises what's moved, what's stalled, and what still needs to be done. From energy reforms to digital connectivity, we track the administration's economic agenda and how it's impacting business and investor confidence. This is part 2 of our special SONA report. Sujin Kim has the details.
In his 2024 SONA, President Marcos laid out bold expectations for the energy sector, from boosting power supply to reforming outdated laws.
As energy projects get completed and new investments pour into this sector, we expect our nation's power supply to increase.
Marcos touted major strides towards a unified Philippine grid, effectively promising a fully interconnected national power grid. On the policy front, Marcos made a significant appeal. He urged Congress to review and amend the Electric Power Industry Reform Act, or EPIRA Act of 2001. This law liberalized the power sector 2 decades ago, aiming to lower electricity costs through competition, but prices remain among the highest in Asia.
Hinihiling ko sa Kongreso na pagtulungan na natin ito alang-alang sa kapakanan ng mga Pilipino.
As of today, however, EPIRA has not been amended. The 19th Congress, which ended in June, failed to approve an EPIRA reform bill despite it being on the priority list.
The promise of lower electricity cost brought about by the EPIRA. Nangyari po ba yun? Nung dumami ang small players, bumaba ba yung cost of power?
Outside government, experts have been candid that tweaks to EPIRA may not suffice without deeper changes. Sony Africa from think tank Ibon Foundation adds that while the Marcos administration pushes for amendments to lower prices, the changes being proposed fall dangerously short. Ibon argues that the core of the problem lies in EPIRA's continued privatization of the energy sector, a structure that still favors a few big players. The think tank called for strict cooling-off periods to curb conflicts of interest in government appointments. Ultimately, Ibon is pushing for a return to public control through reinforced national participation in generation and transmission. Meanwhile, from one of the country's largest power distributor, Meralco is prompting for additional power supply to effectively lower electricity prices.
We will welcome any additional capacity in the system because at the end of the day, it's really supply that will dictate what the prices will be. The more supply that is out there and the more generation companies are able to pump power into the system, especially in the spot market, then that basically becomes the onus for lower costs.
They acknowledge the government's efforts to work with the private sector to lower the biggest driver of electricity bills, generation charges.
We are hopeful that, and we have seen the efforts being undertaken by government. Meralco, as part of the energy family, is likewise working with government to find the best options available for all our customers in terms of lowering the generation cost in particular, because this is the main driver of electricity movements every month. We will continue our quest to add additional power into the Meralco grid through our competitive process. And we are hopeful that with government's help, we will be able to achieve that.
We are steadily progressing towards our targets in the medium term. Our power and internet services are continuously being upgraded in both capacity and connectivity.
The president said last SONA that phases 2 and 3 of the national fiber backbone are underway, with the target completion of 2026. But the lack of cell towers in remote regions continues to hamper mobile connectivity.
Together with our private sector partners, we will efficiently harness the concept of common towers to provide connectivity to Filipinos who are at the far end of the last mile.
So, what happened since then? Earlier this January, the green light has been given for the construction of 1,000 telecommunication towers nationwide. A $150 million or 8 billion peso initiative by PhilTower aimed at expanding digital connectivity across the country. These towers will rise in strategic economic hubs including Bonifacio Global City, New Clark City, and the Morong Discovery Park. The Common Tower Initiative, led by DICT, offered a streamlined solution for telco infrastructure. easing network congestion by reducing the load from 4,000 users per tower, ensuring faster speeds and better reliability. With stronger connectivity, businesses and workers expect improved productivity and competitiveness. So, how do industry stakeholders rate the administration's progress on digitalization?
Sa akin naman 8 yan. Maganda naman ng progress ng administration, especially because they're really serious in funding itong mga free wifi sa mga hard to reach areas.
It's an 8. What would make it a 10?
Perhaps actually more investment from the government, more support from the government.
So if he gave an 8, what would you do?
Same.
An 8. What would make it a 10?
Basically, it's really hard to get a 10 because when you say 10, there's a confluence of many variables, including infrastructure rollout, which I think similar to if the budget of the ICT would be a measure, it's just the same as similar to past administrations.
The verdict, the progress is evident. Promises have taken form, but stakeholders warn without greater budget commitments and government support, digital equity and the promised boost to economic productivity may remain out of reach for millions. As digital connectivity spreads across the country, the administration hoped it will do more than just improve speed. It aimed to foster a stronger, more trusted business climate. Sujin Kim, Bilyonaryo News Channel.
Online gambling scams in the Philippines are surging. Now the hotbed for illegal gambling links and fake offers. Over 4,300 cases have been flagged, reflecting a widening loophole in digital consumer protection, just as the Philippines tries to modernize its online gaming laws. Authorities say they're uncovering up to 20 illegal gambling sites a day, prompting policymakers to draft tighter rules to combat fraud, prevent underage betting, and restore trust in digital gaming. The spike in scams underscores a growing cybersecurity risk and a warning sign for investors and tech platforms alike as the Philippines expands its digital economy. We're taking a quick breather. Business 360 will be right back. Welcome back. AstraZeneca is investing $50 billion in the United States, a massive bet on American manufacturing amid rising tariff pressure. The pharma giant plans to build a new drug facility in Virginia and expand R&D and cell therapy manufacturing across Maryland, California, and Texas. It's the latest move by a major drug maker responding to U.S. President Donald Trump's call to make medicines in America or face higher tariffs. For global firms, it's a strategic shift that could reshape supply chains and raise the bar for local production. Elsewhere, Iran's foreign minister says Tehran will not abandon its nuclear enrichment program despite heavy damage from the recent war with Israel. The U.S. struck Iranian nuclear facilities as part of its support for Israel, dealing a major blow to Iran's atomic infrastructure. But Minister Abbas Araghchi insists that the program will resume. He says Tehran is open to talks to prove its nuclear activities are for power and not for weapons.
Our nuclear program, our enrichment program is not something imported from outside that can be destroyed by bombings. It is developed by ourselves. It is an achievement by ourselves. The technology is there. The scientists are there. The people who have run these facilities are there. Buildings can be rebuilt. Facilities can be rebuilt. Machines can be, replaced because the technology is there. I think the recent attack proved that there is no military option.
The Late Show with Stephen Colbert is officially canceled effective July 17, but the controversy is far from over. The decision comes just days after Colbert accused Paramount, CBC's parent company, of bribing U.S. President Donald Trump to push through with a multi-billion-dollar merger with Hollywood giant Skydance. The comedian's fans aren't taking it lightly, flooding social media with protests and calling the cancellation political retaliation.
He's got 1 year to really give it to Trump, and I think he should just pull out all the stops, just say whatever he thinks. I'm sure he does it anyway, but I mean, he's got a year, and hopefully he'll burn Trump to the ground by then, so it won't matter that he's gone. We could probably bring him back.
The fallout raises larger questions about media freedom and whether corporate consolidation in Hollywood is silencing critical voices in the age of Trump. Now, here at home, the Aito, the luxury electric vehicle brand backed by Huawei, is already on Philippine roads. But its story begins in Chongqing, China, inside a multi-billion-dollar AI-driven smart factory that's redefining auto manufacturing. As China's EV makers race to dominate global markets, including Southeast Asia, Aito hopes to stand out in the high-end segment. Our mobility correspondent, Bilyonaryo, has the story.
Chinese luxury electric vehicle brands are charging into the Philippine car scene, and one name to watch is Aito, part of the Ceres Group and brought in locally by QSJ Motors Philippines of businessman Kevin Chang. BNC Mobility visited the Ceres Super Factory in Chongqing, China, the heart of Aito's operations, to see firsthand how these EVs are built. QSJ Motors after-sales director Ben Chua explains Aito stands for adding intelligence to auto.
It is always our brand vision to redefine luxury through technology. So we add the technology luxury by combining traditional luxury.
Aito mixes timeless luxury touches with next-level tech. You've got power and design on one side and intelligence in driving, comfort and safety on the other. Chang says the immersive experience, dubbed Cyber Tour, gives the Philippines an exclusive glimpse into the future of mobility.
Philippines is the first country in Asia to ever visit Aito's Super Factory.
This is just part of what people can see at the Ceres Super Factory in Chongqing, China. This 1 million square meter facility is very high-tech, which can produce vehicles up to 1,200 a day. This isn't just a big plant. It's one of the largest new energy vehicle factories in the world. Backed by a $1.75 billion investment, it uses more than 3,000 robots that work together to build sedans, SUVs, and MPVs. And it's not just smart, it's sustainable too. The factory has a 100% cleanup system for emissions, which means harmful fumes are filtered out before they hit the air. And when it comes to water, the plant recycles over 200,000 tons every year. That's like reusing the water from 80 Olympic swimming pools. Zhang Xingyan, Vice President for Overseas Business at Ceres Group, is betting big on Aito's potential globally.
Aito is very young and is ranked in China, mentioned as a high-end energy brand.
After seeing how Aito builds its cars, we next find out how intelligent they really are on the road. For BNC Mobility, Bilyonaryo, Chongqing, China.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us. Keep it here on BNC, the Bilyonaryo News Channel.